Welcome back to the channel. In this video I just want to go through how I use a stock screener to obtain a list of stocks that could be interesting in terms of investment, particularly dividend stocks. So this is a process I usually go through every Monday morning to scan the market for opportunities. So I use marketbeat.com, which has a stock screener tool. And you can see I've saved my own stock screener, which is, I've called it KR Stock Portfolio Screener. So this has my key criteria saved so I can quickly run this every week. So I'll just run through. You can see there's these tabs. So you've got general, fundamentals, dividend, technical, and then a saved screeners where you can keep all your saved screeners. So we'll start with general. The only piece of information I play with here is market capitalization. So you can see MarketBeat has a list. So you've got mega cap, which are companies valued at more than $200 billion, right down to nano cap, which are under 50 million. I only screen stocks in the mega cap and large cap settings. So I really want to ensure that I'm investing in companies that are well established, large blue chip type companies that are reliable long term. They've been around for a while and you expect them to be around for much longer still. So let's just say we're going to look at mega cap companies today. That's literally the only option I pick on that screen and move straight into fundamentals. You can see there's a lot more information on this screen, but don't let that faze you. I'm really interested here in P ratio. So P ratio trailing. Now you can see I've put a figure of 29.3 in there. So I just want to try and explain the rationale for that choice. So I'm just going to show you, this is a graph. This is called the Shiller P ratio graph. This is a measure of the price earnings ratio for the whole of the S&P 500 plotted over probably since records began prior to 1880. So you can see that graph has been fluctuating around. You can see the graph's got some key dates plotted on it. Black Tuesday just before the 1930s, Black Monday in the late 1980s. You can see the dot-com bubble, 1999-2000. You can see the Lehman Brothers subprime mortgage disaster, you would call it, in 2008. And then you can see we've been steadily on this upward trajectory since 2008. You can see the blip. Yeah, well, that's probably last year, 2018, 2019. And you can see at the moment we're around 31.4. What that means is the market price to earnings ratio is around that level, which means for every dollar of earnings you're paying 30 times to buy into the stocks on the indices. So my rationale for the 29.3 is I want to invest in stocks that are trading below the average for the index. So at the moment I've got 29.3, but I'm going to increase that. We're looking at 31.4, so I'm going to say I want to look at stocks with a P ratio of below 30. Okay, what that should do is give you companies that are fairly valued, and it should suggest that there's a little bit of upside potential depending on how close they're operating to that 30 level. Okay, so that's a key bit of information I want to scan. The other information I want to set parameters for is quick ratio. So quick ratio is a measure of a balance sheet in terms of health. So looking at the assets and liabilities of a company, is a company able to cover its liabilities with its assets? A ratio of 1 would say that the assets and liabilities are sort of at a level where the assets are covering the liabilities. So I want a quick ratio in my investment stocks of at least 1. So you can see here I've picked greater than or equal to 1 I should have explained earlier on the P ratio, I've put less than or equal to 30. So I'm going to look for companies with a quick ratio above 1, which should suggest a healthy balance sheet. It's a very quick look, but I think it's enough to determine whether the balance sheet's in decent condition. I'm also interested in profitability. I want the company to be able to demonstrate that it's profitable on the bottom line, not just top line gross margin. I want to see net margins healthy. Now, I set a target of 10%, but this is obviously very much related to sector. That said, I don't want anything below 10% regardless of sector, so 10% to me is a minimum. I'd like to see it 20, 25, perhaps more depending on the sector, but for me, single digit margins are too low. Too much risk of the company moving into a loss-making situation, which is going to be detrimental to the share price, the stock price. So those are the 3 key criteria I'm looking at there. As I said earlier, this is all about dividend stocks. I want to invest in stocks that are going to pay a dividend to me as an investor. So I'm going to look at companies that have a dividend yield of over 3%. So we know that inflation's probably operating around 1%. You've got tax considerations. Personally, as an investor in the UK, I'm going to have to pay 15% withholding tax. So investing in a dividend stock, it needs to be worth my while. So I've decided that the dividend yield must be above 3% for it to be worthwhile for me. Obviously you can make your own decisions on that, but for me it must be at least 3%. We could start looking at, dividend growth and consecutive years of dividend growth. I think it's important that the stock has paid a dividend for many years. I'd prefer that to be growth over those years. So we know that companies that have paid dividends for over 25 years and have grown dividends for 25 years, or dividend aristocrats, or 50 years for dividend kings, but I leave those blank. But that is something you could play around with if you're getting an unmanageable list. So let's say you run this screener and you're still getting 50 to 100 stocks. I would then look to further narrow down on average growth and consecutive years growth, but for now I'm going to leave it as it is, and I'm going to focus on payout ratio. So dividend yields over 3%. You could have 4, 5, whatever you wanted, but 3 for me. Dividend ratio is a measure of the sustainability of the dividend. So typically if a payout ratio is going above 70 to 75%, it's getting risky as to whether that company can continue to pay out. Anything near 100% has to have big alarm bells. So I'm going to pick less than or equal to 70%. Okay, so that's the dividend part of this process. Technical, I don't touch technical. It's to do with price range. How close is a price to the 52-week performance? Today's performance changing from. I'm not going to touch any of that stuff. So that's pretty much it. It's very straightforward. Then all you do is hit the search. So let's see what the screener pulls up. Obviously market beats just looking at the parameters inputted. It's searching the database. It's looking at all US stocks on all markets, all US exchanges, and it's been able to find 2 stocks, which is quite interesting. So we've got MRK, Merck & Co, and PFE Pfizer, both medical companies, which is interesting. Pharmaceuticals, as we said, these are mega cap. They're above 200 billion market cap. and that's just basic price information. But the interesting thing with this tool is you have these tabs. Once you've got your search results, you can look at valuation, earnings, performance, debt, dividend, and additional indicators. So we'll just have a quick look through. So in terms of valuation, you can see the price earnings has come well below the 30 that I had as a parameter. You've got forward price earnings, got a whole load of valuation metrics. In terms of earnings, we can see the net margins are both above 20% for these companies, both profitable companies. In terms of performance, that's really looking at price performance. What I like to look at here is the current price versus the 52-week range. As you can see for MRK, 82 bucks. It's had a high of 93 and a low of 65. That suggests to me there's some upside potential. Really, by picking a P ratio below the market average, you're expecting the company to be performing below the market average. So following the March crash, if you want to call it that, due to COVID-19, these stocks maybe haven't recovered back to the pre-March levels. That's suggesting to me that Pfizer's maybe recovered a little bit more than MRK. But again, Pfizer's operating below the 52-week high. In terms of debt, you can see again that the quick ratio is above 1, which is good. Dividend, so MRK is generating a 3.1% yield, Pfizer 4.2. You can see there's some good 3-year dividend growth. Payout ratio well below 70%. Looks like we have an opportunity to get in to these stocks within the month of October and benefit from the next payment, the next quarterly payment. Additional indicators. This is a nice piece of information to what we've just discussed on the pricing. The fact that there should be some upside potential. So for MRK, we're looking at 15% upside. There's a consensus price target of 94. Pfizer 39, 6.5% there. So there's some good information. Just a bit of a disclaimer, I am invested in both of these stocks. I invested in MRK some time ago. I've increased my investment and I've just added PFE this week. So this isn't intended to be financial advice. I'm not giving any advice here. What I am trying to do is just give a flavour of my approach to scanning for stocks that look valuable, look like a good long-term investment, look like a good solid dividend payer. My approach is probably, to try and characterise my approach, it is defensive. I'm looking for long established, I'm looking for value. I'm looking for a dividend that's sustainable. But I'm also looking for stocks that do potentially have some upside as well. So it's a bit of a hybrid approach. I hope that's been useful. That's what I like to do, and what I'm hoping to do on the channel going forward is on a Monday I would like to try and post videos which show the results of some of these screenings that I do, which can hopefully help you make some decisions on potential stocks. But as I say, it's important to do your own research. It's important to start to understand how to assess a company before making any financial decisions. So thanks for watching. If you've got any questions, please leave them down below, and I'd love it if you could like this video and subscribe for more. Thanks.